is by my work, we're a $4 trillion economy today in crypto. If we extrapolate trend rate of growth and assume the network growth slows over time, I think we get to 100 trillion by 2032, 2034, 100 trillion. That means there's 96 trillion of wealth that's going to get created. So halve me, and I say this all the time for being an utter moron, $46 trillion of wealth is about to be created. It's the largest wealth generation event in all human history. It's fractionalizable to a rice worker in the Philippines as it is to somebody in Fifth Avenue. It is an unbelievable opportunity. And to go back to it, you're front running the institutions and you get to do all of this.
Right? Like all I could continue to do with the team at MoonPay is build against the trend line that you and I are talking against. And like, that's why like I'm absolutely so incredibly bullish and excited over this next year.
The biggest wealth creation event in history may already be underway. MoonPay President Keith Grossman and Real Vision's Raoul describe what they call the golden age of crypto. Powell points out that crypto today is a $4 trillion economy. If the current growth curve continues, that figure could expand to $100 trillion within the next decade. That means $96 trillion of new wealth, far larger than any single boom in modern finance. And unlike previous cycles that stayed concentrated on Wall Street, this one is accessible to anyone, anywhere. A farmer in the Philippines can own the same fraction of opportunity as an investor on Fifth Avenue. Grossman takes it a step further. He argues that governments trying to build an anti-crypto army are fighting the wrong battle. This isn't about ideology, it's about technology. The world is shifting to faster, cheaper, and more efficient systems. AI may accelerate that trend, but only blockchain provides the rails to handle it. Over time, crypto will disappear into the background just like plumbing. Nobody thinks about how a toilet works, they just need it to work. Blockchain will function the same way. The transition is already visible. Today there are around 600 million active crypto wallets, evidence that adoption is spreading fast. Grossman imagines what Uber would look like if it were rebuilt on tokenized rails. Drivers wouldn't just be gig workers, they'd be partial owners of the network. That's the promise of tokenization: fairer participation, broader distribution, and access to assets people never had before. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Administrative changes can change regulations. It's harder to change laws, right? There's too much money now at stake, right? You look at like the top 10 Bitcoin holders, today versus the top 10 Bitcoin holders a year and a half ago or 2 years ago. It's unidentifiable, right? Like when all of a sudden you look at it and you say BlackRock controls X amount of the Bitcoin supply, is an absolutely amazing stat. Like these ETFs are vehicles for the larger financial ecosystem to absorb. And I think that regardless of how infuriated you get by journalists writing about the ecosystem, and I think some journalists are beginning to come along and come around to them to see that there is positive in this ecosystem. I think that governments are beginning to realize that there's no such thing as an anti-crypto army, which is possibly the stupidest, most energizing slogan on the planet to get an opposition rallying. The reality is this is a technology, and all that is happening, and I've said this now, this will be the third time I say this on this podcast, but all that is happening is the world is getting faster, more efficient, and cheaper to move things around, right? And, AI and machine learning is accelerating the faster and the cheaper. But the reality is that blockchain technologies are the only technologies that can pace the speed of AI technologies, and it's going to become ingrained in everyday life. And at the end of the day, people are not going to talk about, a lot of the infrastructure. I wrote this article called "Nobody Cares How Your Toilet Works." That's sort of what's going to happen in the crypto space. But you know what? If you go onto Wikipedia and you say, "How does my toilet work?" you get a 10,000 word article with 82 references in it. Nobody cares. Nobody cares. And you know what? People just want faster, cheaper, easier.
The difference is we all get a stake in this. You just have to buy a token of the underlying decentralized infrastructure rails, and we can all participate. We did not in the internet, and here we get a second do-over, and the whole of humanity can get involved. The 600 million active wallets, the 600 million participating in this.
I couldn't agree with you more. I think that this is the most misunderstood aspect of the whole entire thing. Like, if I was to rebuild Uber today in a tokenized world, I could build Uber in a manner that benefits all the drivers. In the pre-tokenized world, I could tell you right now that Uber is going to end in a manner that does not benefit the drivers, right? Like, the drivers are the biggest cost center for Uber today. They are going to 100% move towards a Waymo model, right? You could see that. The drivers are ultimately what is driving all of the AI gathering for Uber. In a tokenized world, the drivers would have an ownership stake in the network that they're building, right? Like, people do not understand that this evolution will actually benefit the masses more than hurt the masses. And will some people benefit more than others? Yes, but that happens in any moment of change, right? But like, in the grand scheme of things, the US debt is in a better spot today from where treasuries can be parked. Humanity's in a better spot in terms of more people gaining access to the money that should be owed to them versus intermediaries, and more people will ultimately be able to gain access to real valuable assets that they never had access to before. That is what the larger sort of aspect is happening with the tokenization of the world, and that's what gets me so excited on every level.
So my final thing on this is, by my work, we're a $4 trillion economy today in crypto. If we extrapolate trend rate of growth and assume the network growth slows over time, I think we get to 100 trillion by 2032, 2034. 100 trillion. That means there's 96 trillion of wealth that's going to get created. So halve me, and I say this all the time, for being an utter moron. $46 trillion of wealth is about to be created. It's the largest wealth generation event in all human history. It's fractionalizable to a rice worker in the Philippines as it is to somebody in Fifth Avenue. It is an unbelievable opportunity. And to go back to it, you're front running the institutions and you get to do all of this.
Keith Grossman highlights a problem that still looms large over crypto: its connection with the traditional banking system. From his experience in the Cayman Islands, he says banks want nothing to do with crypto, not because of politics, but because of compliance. Strict US KYC and FATF rules make them wary of touching funds they can't fully verify. This friction shows that while blockchain rails are advancing quickly, integration with legacy banking remains an unresolved hurdle. Grossman notes that regions are tackling this challenge in very different ways. The US tends to allow chaotic experimentation first, stepping in with regulation only once problems arise. Europe flips that model, laying down rules up front and forcing innovation to adapt within that framework. Over time, he says, both approaches usually converge, as we've already seen with global privacy laws shaped around Europe's GDPR. Raoul Pal adds another perspective: the institutional wave. Early crypto libertarians often fear that Wall Street is co-opting the industry, but Pal views institutions as a Trojan horse. Their involvement isn't suffocating the space, it's accelerating it. By building financial products and infrastructure around crypto, they're speeding up the creation of a parallel financial system. Retail investors, meanwhile, still have the chance to position themselves ahead of the Wall Street wall of money. The difference this cycle, Pal argues, is that the stakes are far higher. What's unfolding isn't just speculation, it's the real-time rebuilding of the global financial system's underlying rails. Let's get back to the interview.
One of the issues that's not solved in the whole stack that you're doing, that I uniquely see where I am in the Cayman Islands, is our banks hate anything to do with crypto. And it's not because I have a political opinion, it's because of FATCA. It's all of the US KYC rules means that they're terrified of accepting money that they can't KYC properly. Meanwhile, in Switzerland, I have a relationship with Signum Bank, and Signum's fantastic, but they do on-chain KYC. So they can check, it's just a new way of doing it. We need KYC, the on-chain KYC, to get acceptance into the banking system for international. The US, they can do whatever they want, but for international payments, because of US rulings, it's actually really hard.
Yeah, what I would say is, about 2.5 years ago, we made a real bet as MoonPay on what's the future of this ecosystem. And, we had a very, very serious, like most new evolutions start from purely libertarian principles, right? Like this will replace that. And most mass adoption occurs through convenience and it's more messy, right? One of the bets that we made, and I think was really important to our maturation as a company, was we bet that for crypto to truly evolve, it would have to evolve in sync with the global financial ecosystem. And what that means ultimately is that licenses and, the money transmitter licenses being MiCA compliant, being FinProm compliant, like making sure your KYC and AML is like as pure as possible and as clean as possible was unbelievably important, right? And that's what like set us into our journey to make sure that we have what's the equivalent of the golden stack in the United States with, all 47 MTLs. You don't need all 50 because there's 3 states that, like allow it to work, but like getting the New York BIT license and money transmitter license a few weeks ago, all really important. Being MiCA compliant, we were the first company to be MiCA compliant. We were FinProm compliant in the UK. Like that is going to be where the rubber hits the road, is what you said, which is how money enters into the ecosystem and how money exits the ecosystem.
Because particularly the EU, the UK, and the offshore jurisdictions are terrified of the US regulations, and so they just reject everything. That's half the reason the UK banks won't take crypto, is this.
Yeah, and I think it's a maturation globally of like making sure everyone comes online. Like the one thing that I feel good about is whether you agree with, US policy or European policy or UK policy. The one thing I'm thankful for is at least policies being established so we understand like what the rules of the road are. I will say that the way that the US tends to operate from a regulatory perspective and the way that the Europe tends to operate is completely different, right? The US tends to say, we're going to allow you to experiment and innovate in chaos until we tell you what the rules are. And the Europe tends to say, we're going to give you this box and you have to innovate within this box, right? And then maybe we'll change the rules to accommodate where the innovation goes after the fact, right? And so there's this point where both have to meet in the middle somewhere, and that just sort of takes time. And we saw that also with like the internet. We saw that, Europe was far ahead of the US when it came to GDPR, right? And like the US will catch up with that, right? Because we started to see it with CCPA and some other regulations around privacy over time in traditional media.
If you step back and see what is happening, we always said, and I've said for the last 3 cycles, that we can front run the institutions. And here the institutions are, right? So we've been able to get to the front run them. They're still coming in slowly. So it's still that opportunity for every man is there to front run the wall of money from Wall Street. But there's a school of thought, particularly around the early libertarian Genesis people, they're like, oh my God, Wall Street's co-opting our technology and they're taking it and turning it into equity and all of this kind of stuff. My view on this is yes, but it's a Trojan horse because we're actually accelerating this parallel financial system.
Crypto's trajectory is no longer just about price cycles, it's about systemic transformation. On one side, unresolved frictions with legacy banking and compliance highlight the hurdles that still slow adoption. On the other, the sheer scale of institutional participation, technological advancement, and global wallet growth points to a parallel financial system already taking shape. If Raoul Pal's $100 trillion projection proves even directionally correct, the coming decade could dwarf every past wealth creation cycle while being radically more inclusive than anything finance has ever seen. The open question is whether regulatory harmonization and institutional scaling can arrive fast enough to unlock that full potential, or if structural resistance from banks and governments will keep crypto from reaching escape velocity. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.